Looking back, it's amazing how far the United Arab Emirates have progressed in such a short space of time.
Once a barren and lowly industrious country, specializing in fishing and pearl searching, the discovery of oil and its subsequent exportation beginning in 1962 has allowed the United Arab Emirates to become a top-tier economy of the 21st century.
We came to maturity long before anybody had expected us to do so. And we have demonstrated that we stand with each other, thick or thin.
The United Arab Emirates is a small country the size of Maine on the southeastern side of the Arabian Peninsula. After being under British mandate, the UAE first came to formation in 1971, and today is comprised of 7 different emirates or kingdoms, each with a different ruler, known as an emir. The governing authority is in the hands of the Federal Supreme Council, which is made of the 7 emirate rulers who establish policy and sanction federal legislation.
As the 7th leading producer and 6th largest exporter, crude oil is the primary resource that we will be analyzing in regards to the UAE's international interactions on an economic level. The economy is split into 2 major sectors, the first being industry and the second service. Due to the many opportunities with crude oil, the industry sector makes up the majority with 60% and the service at 40%. Currently, the GDP is at $359 billion and the GDP per capita is at $65,000. If we look back over the years, the GDP per capita has been on a steady rise since the mid-1980s, yet it took a dive with the global economy in 2008. However, it is already on its way back to pre-recessionary levels. Other relevant numbers include the real growth rate, which fluctuates around 4%, unemployment, which is at 2.4%, and inflation, which is at 0.7%. From an international economic standpoint, one should note that the exports consist of 96% of the GDP, while imports are at 79%.
The UAE's top trade partner is India in both exports and imports, totaling an annual value of $43 billion. Other major export destinations include Canada, Iran, Saudi Arabia, and Switzerland, while major import sources consist of the United States, China, Japan, and Germany. The UAE's total exports value at $350 billion and its imports at $250 billion.
Trade openness and protectionism, today and recently. In terms of trade openness, the UAE is very open to trade. The Index of Economic Freedom was created in 1995 by the Heritage Foundation and the Wall Street Journal to measure economic freedom around the world. The index examines rule of law, limited government, regulatory efficiency, and open markets in each country. The UAE received a score of 71.4 out of 100 and is ranked 28th in the world. In 1995, the UAE entered the WTO in attempts to create a global, liberal, and competitive business environment. Furthermore, by establishing free trade zones, the UAE took a significant step toward diversifying its economy. Additionally, the UAE's economy includes 100% foreign ownership, 100% import and export tax exemptions, 100% repatriation of capital and profits, an absence of corporate tax for 15 years and an ability to renew this for another 15 years, no personal income taxes, help with labor recruitment and additional services including sponsorship and housing, no obligations to recruit local agents. And additionally, from 1995 to 2004, the UAE witnessed a 98% increase in exports as well as a 133% rise in imports. This occurred without any protectionist measures by the UAE government. Finally, another noteworthy fact is that less than half of the UAE's export value comes directly from oil and gas products. In terms of protectionism has been relatively low compared to other countries for the UAE. In 2003, the UAE joined the GCC Customs Union. It implemented a 5% tariff on 1,500 imported items from non-member countries. In particular, imports of liquor are subject to 50% customs duties, and imports of tobacco are subject to a 100% tariff. The 5% is significantly lower than the maximum allowed tariff of 15% by the international trade regulations of the WTO.
The United Arab Emirates attracts a large amount of foreign direct investment through its open trade policies. In 2006, the stock of inward FDI the United Arab Emirates has attracted amounted to $37 billion, from less than $1 billion in 1990. Between 1990 and 2006, FDI has grown at an annual average rate of 27.6%, while in the 2000s the annual growth rate amounted to nearly 80%. In 2014, the UAE is estimated to attract $14.4 billion, 20% higher than 2013. Some major multinational corporations located in the UAE include Microsoft, IBM, Oracle, Cisco, HP, Nokia, Siemens, and CNN. Many multinational corporations and companies invested in UAE choose to hire expatriates and locals that bring expertise to their industry. The UAE attracts both low and high-skilled migrants due to its economic attractiveness, political stability, and modern infrastructure. In 2013, the UAE had the fifth largest international migrant stock in the world, with 8.8 million migrants, out of a total population of 9.2 million, based on UN estimates. Controversy has surrounded the UAE's kafala sponsorship system, which has increased competition for UAE nationals and exposed migrant laborers to human rights abuse. The UAE has pegged their dirham to the US dollar since 1978 at a fixed exchange rate of 3.67 dirham per US dollar. In a fixed exchange rate regime system, the government or central bank intervenes in the currency markets so that the exchange rate stays close to the targeted exchange rate. Due to poor economic conditions in the European Union and US, economists in the UAE have been debating whether to break away from this exchange rate policy.
The UAE's factors of endowments include oil, minerals, and financial services. As stated in the Heckscher-Ohlin theory, countries have a comparative advantage in the good that uses their abundant factor. This is the case for the UAE, as they have benefited tremendously from their comparative advantage in the lucrative industry of petroleum. However, its government is promoting policies to diversify and expand the economy. UAE firms invest heavily in technology, as evidenced by the large number of technology firms located in the country, including Microsoft, Oracle, Dell, Cisco, and IBM. Also, policies established in the UAE have attracted FDI, which has greatly helped the economy, as well being pegged to the US dollar has both helped and hurt the UAE, which has been based upon the US economic performance.
However, despite major economic advances, the UAE is still facing major challenges in the near future due to its lack of political freedom and demographic inequalities. And due to this sizable labor force, the sex ratio suffers from severe inequality. There exists 2.19 males to every 1 female in the country, and a staggering number of 3.22 males to every 1 female in the age group of 25 to 55-year-olds. This mixture of lack of political rights and social frustration by working-class males could cause problems in the future for the UAE. However, despite these murky elements, due to the current economic position and the UAE's policies toward international trade,
we foresee that the UAE has a strong future and will grow into one of the most influential countries in regards to the global economy. Through high foreign direct investments, high exports, continued effort to diversify the market, and a dedication to free trade, the UAE is making strong forward strides to the future.